In this session, I want to explain a very interesting concept which is called barbell strategy, or we can call it barbell modeling, whatever. This has been popularized by author Nassim Nicholas Taleb, author of the Black Swan, actually of the Incerto series, which comprises a set of 5 incredible books. But anyhow, he uses initially this concept to explain a sort of investment strategy, but then we can apply it back to our life, or if you wish, to your own business. So how does a barbell strategy works? In a barbell strategy approach, you use two different extremes in order for you to achieve long-term result. In other words, instead of actually being, for instance, extremely conservative or extremely aggressive, you do both, but you are sure that you can try to actually balance the things out. For instance, let's use an example here. Let's say that you were to invest your own money. With the barbell strategy, the way you would do it is you would keep most of the money in an extremely conservative asset class. So let's say over 90% of your wealth in long-term bonds. And remember, this is not an investment advice, but let's imagine that you were to invest according to the barbell strategy. You would keep 90% of your wealth invested in a very conservative asset class, like again bonds at 10, 20 years, which will give you a very small percentage return, but you know that your capital is safe. And then on the other side, extremely aggressive bets, or if you wish, extremely aggressive asset class investments that in the case of Taleb were represented by options, financial options, because he's very technical, he knows how to use them. But for an investor, the a different example, or for anyone else, a different example is placing bets with a small amount of your capital on things that are very forward looking, or at least that can have a huge return, but also very risky, meaning that you actually risk to lose them, and even if you lose them, you feel comfortable with that. Even though on the other side, when it comes to the barbell strategy, the way Taleb really conceives it is more based on understanding that even on the extremely aggressive side, you want to have a calculated bet, a calculated risk. So even that you want to spread it in a way that is going to give you an upside which is much larger than a downside, what's called a white swan, instead of the opposite scenario where you have a black swan. Instead of being exposed to a black swan, which means that you have a scenario where you can lose way more than you can gain, you want to create the opposite scenario. Even for your aggressive investment strategy, you want to create a scenario where your downside is kept. Instead, your upside is actually potentially unlimited, even though this is in theory possible. In practice, it's going to be always limited, but again, your upside is going to have much higher potential. And as an example, we can expand and extend this theory also to what I like to call technological modeling. I call this technological modeling in a framework that I developed for a 4-week MBA, where I explain how tech companies work, to explain how companies can benefit from this barbell approach, where they can have a conservative, very conservative approach, and then on the other side also look for technological investments that can have huge returns. So on the one side of this approach, of this technological modeling, we can use the barbell, where on the one end we actually use a continuous innovation strategy. So we look for incremental R&D, incremental research and development on our product. And then on the other side, instead, we look for a breakthrough innovation. So we also place bets on things that we can do in the future.